Hello everyone, my name is ATP and welcome to another episode of our testing strategy series, a type of video where we test complete trading strategies suggested by you. Not only will I show you how each strategy works, but I will also test them across multiple markets and time frames, presenting you with accurate and impartial results. If you are new here, don't forget to subscribe and let's get started. Today's strategy was suggested by one of our YouTube subscribers, so a big thanks to you for sharing this with us. This strategy uses a combination of three indicators that I personally never tried, so I'm very excited to see how it performs. To start, let's add all necessary indicators to our TradingView charts. I will follow the exact rules that were stated by my subscriber. First, we have the main indicator, the zero-line volatility quality index, this one here by logs, which is going to be the trigger indicator for this strategy, so the indicator that gives us the buy and sell signals. By definition, the zero-line volatility quality index is an indicator that analyzes potential entry points based on the market's volatility with a unique calculation method that makes it more adaptable to different symbols and time frames. For the settings, I will use 14 for the smoothing period and 7.5 for the type. As you can see, this indicator is displayed as a histogram with a line that oscillates around the zero level, giving us these long and short signals that we will use to enter in trades. Alongside, we will add the famous MACD, this one here, which is going to have the filter function, so the job of eliminating fake signals from the zero-line volatility quality index. For those who don't know, the MACD is a popular technical analysis tool used to measure momentum and trend direction. It is also plotted as an histogram with these two lines that we can also use to enter in new trades. But for today's strategy, we won't need them, and so I will go to the style section to uncheck them. I will also change the histogram's display to an area and change some colors. Next, I will go to the inputs tab and change the MACD's fast length to 100 and the slow one to 200. And now our filter indicator is ready. As I told you, its function is very simple. Eliminate fake signals from the trigger indicator. And how? You will only consider long signals from the zero-line volatility quality index when the MACD is above zero, so when its area is green. And you will only take short signals when it is under zero, so when its area is red. Lastly, we will add a baseline indicator, which will be the Kaufman Moving Average Adaptive, this one by H. Potter, which will help us align trades with the major market trend, further reducing false signals. The Kaufman Moving Average Adaptive is a trend-following indicator that adapts its sensitivity based on market volatility, reducing market noise. For this strategy, you will need to use it with a length of 100. With everything in place, here's an example of a valid buy setup. The zero-line volatility quality index gives a buy signal, the MACD is above zero, and the price is above the 100 Kaufman Moving Average Adaptive. Likewise, for a sell setup, the zero-line volatility quality index gives a sell signal, the MACD is below zero, and the price is below the baseline. Regarding the stop loss and take profit management, I will also follow the subscriber's exact rules, using a stop loss with a 2% loss and a take profit on the 1.5 risk-reward ratio. Also, although the subscriber asked me to test this strategy only on Bitcoin, I will test it across different markets to assess its robustness and adaptability. For this series, I will take a comprehensive approach to the testing setup. I will be analyzing this strategy on 7 different time frames: 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, and daily. Regarding the trading assets, we are going to test the strategy on 5 different ones: Bitcoin from the crypto market, Euro USD from Forex, gold from commodities, Apple from stocks, and the S&P 500 index from equities. By covering such an expansive range of assets and timeframes, we'll get a solid view of the strategy's robustness and performance across several scenarios. Regarding data, I won't limit the data set. Instead, I will use all available historical data on TradingView for each asset and time frame, ensuring we gather the largest possible sample size. With everything in place, it's time to begin the backtest. While I could go back in time and test everything by hand, as probably all of you will do, I prefer to speed up this process. For that, I will use my premium indicators testing bot, a tool that allows me to test thousands of strategies quickly and effectively, providing real results. With it, I can define all these indicators with their respective functions, along with many other options. If you are interested in using this tool for your own testing, you can find more details on my website at algotradepro.com. Once we have set all the conditions, the trading bot will execute every valid trade on the charts with the respective entry point, stop loss and take profit. Also, you will see the monthly results displayed along with overall statistics for each asset in the Strategy Tester tab. Since I have the premium TradingView plan, I can download all the trades the bot executes, which I will use to create my trading journals with all the information about this strategy. I will speed up this part of the video, but feel free to slow it down if you would like to catch each detail. I will see you in a few moments. After running the backtest, I have compiled the data into my trading journal, where we can evaluate the performance of each time frame. Starting with the lower ones, the 1 minute, 5 minutes and 15 minutes, we can see that although all the results were profitable, the equity charts were inconsistent with big drawdown periods. If you want, you can pause the video to check every single detail. On the 1 minute chart, the S&P 500 index was the best performing asset, on the 5 minutes it was the Apple stock, and on the 15 minute it was Bitcoin with a big net profit and low drawdown. Next, in the 30-minute time frame, although the results were very choppy, we can see that Bitcoin got an amazing performance with a net profit close to 100% and a max drawdown of only 20%. Which give us a return over max drawdown ratio of 5, which is well above the average. This overall equity chart is a result of the other 4 assets, which achieved poor results. Then, on the 1 hour time frame, the results were profitable as well, with a net profit above 100%, but with a big drawdown period. In this time frame, the Apple stock was the best performing asset, as you can see. Next, in the 4 hour time frame, this strategy was quite efficient, because after 900 trades, it got a win rate close to 43% and a net profit of 116%. Here we've got the results of every asset and the equity chart, which was quite solid. Finally, on the daily time frame, the results were similar to the 4 hour time frame with a growing equity chart. So, according to these results, it seems that overall, the 4 hour and daily timeframes can be good ones to apply this strategy. Or, for example, if you want to trade only Bitcoin, the 15 minutes and 30 minutes timeframes can be good ones to achieve consistent and profitable results. Of course, remember, this testing series is all about impartial analysis. I'm not here to judge if a strategy is good or bad, but rather to present its real-world performance across different market conditions. The performance could vary significantly if you change the conditions or even the settings. So please always test your strategies before putting them into practice. If you want to see your strategy tested in a future episode, just leave a comment with a full setup or share it on our free Discord community. And that's it for today's episode of our testing strategy series. Thank you for watching, and if you enjoyed this video, please give it a thumbs up and consider subscribing for more strategy and indicator tests like this one. I will see you in the next one. Bye bye.